All right, welcome again, traders, to Impact Trading Services weekly planning. We're going to do a data planning session. This video will be found in the playlist. Go to the YouTube at Impact Trading Services playlist, and this will be gold weekly analysis, supply and demand, support and resistance. What we want to do is look at our daily, weekly, and monthly ranges right now to plan for ups or downs in the market. Why don't we start with the month? We're mid-month, a little over mid-month. We have about a week and a half left in January. So we have a week, really last week in January, 21st. So this month right now, we want to look at monthly data. This month right now looks extended. It's moved 11,000 pips on the month. So we want to go to our monthly data and see the higher end averages. This is January 2023, and then we have all of 2022. Now, when you do a historical data research, there are trends in data where some years have shorter months or longer months than other years. So if you go to the charts and you actually have the data, if you look back in 2017 to 2019, those months were shorter than the trending months here. So it's always good to use current data. We use the last 2 years data, possibly 3, but the last 2 should give us current trends. Definitely the last one, but if you go back here to 2019, 2018, then you wouldn't get a realistic current update of what the monthly data is doing. So we went back to 2020, which is consistent with 2021, 2022. So let's look at 2022. Our high extended months. High extremes are 16,000, 1600, 1600, 1800, 1800. So those are extreme months, 1600, 1800 extreme. The other high extremes are 12 and 13. So what does that do for us in weekly planning? What that says to us is we may get a deeper retracement should price come up to 1300 pips on the month or 1400 pips on a month. Now our planning would be, all right, if price moves up another 3,000 pips, then that puts our month at 14,000. Then we go back to the monthly data, and we see 14,000 is in the upper extreme. So we can actually plan some limit orders in these areas with a high degree of predictability, where we may get a pullback of 6,000 pips back to this level of support down here. So that would be one way to see what we may do moving up on the monthly data. Again, should the month move up here 3,000 more pips, then we may get we know it's at least 1,500 because that does that every month, but we may get a deeper pullback of 4,000, 2,500, 5,000 pips, maybe 6,000 pips down to the 1,900 area, or price may want to continue to push up. But we know there's going to be some resistance coming into these areas. All right, so that would be the monthly. We can do the same strategy for the weekly. We go to the weekly chart here, and we start seeing weekly averages. Now our weekly averages should put us in the same range. So this is all of 2022 weekly averages. We've got 6,000 weekly move for an extreme, and then we've got 4,500 mid-range, 10,000 extreme, 3,500 mid-range, 6,000 extreme, 7,000 extreme, again 4,500 mid-range, 6,000. So it's not uncommon to see 6,000 weeks, 10,000 weeks. So what we'll do here is let's look at January. January 4,600, 6,000, 45, 57, close to 6,000, and 3,000. So we have week 4 coming up in January. So what we'll do is we will use that information on these weeks to go back to our charts and say, all right, this week is starting here. So should price push up from here? That's 800. That is 2,200. 3,100. 4,700. Then we're thinking, all right, 6,000. The last couple of weeks, these averages are getting higher, and we're entering into all-time highs. So we want to know that we may have some pullbacks, and then you use the same logic coming down. So if this week moves 5,000 pips down, then that is lining up with this area of support and demand in the 1860 area right here. So if this week comes back 5,000 pips, then we can start looking for demand in these areas as we plan for a possible larger pullback this week, because we did get a daily pin bar. So this week may come back down 6,000 pips, but where does that put us? That puts us in the 1860 area, and we've already drawn this level of demand on our charts from the weekly and the monthly charts. We've already drawn those levels, so we know what to do when price gets there. Demand may be entering the market where we can place long trades. And then we want to do the same for our daily data, our daily range. This is all of daily range for this month. So let's look at our highs and our lows. So our low ranges are going to be around 1,200. Our mid range is 25 to 3,000. And our highs are going to be 4,000. So we don't have anything above 4,000 this month. On the 6th we have 3,900. And then in December we have 35, 4,000 is high, 43 high. So the high in December is 43. November we have 53.50. So for the last 3 months, our highs for our daily averages are, we're going to say, around 3,000 to 3,500. We have 4,143 in December, and that was it in December. And then January, we don't have anything above 4,000 in January right now on daily. That doesn't mean price might not move 5,000 or 4,000 pips. It's just giving us a guide to have a degree of predictability on the gold average daily ranges, because we're seeing the average daily ranges. All right, so what does that do for us right here? Gold is starting here on the week, and then on our planning day, what we can do is we can measure up and down 4,000, 5,000 pips as we plan this week out for our day. So 4,000 pips, well, that's 3. 3,700 puts us in the 1960 area. Extreme puts us in the 1980 area. 2,900 puts us in the 1950 area. So should the day push up into these areas, which we know there's a lot of demand, and then the New York session comes in and we start getting trade confirmation, then we can say, we could probably, with a degree of predictability, say that during the New York session, 14, 15, 1600 hour, that we may get a daily high, and then we could place a trade and hold the trade for the rest of the day with 1,500 pip pullback for the day, because we're entering in supply area. Now we can do the same for our support areas. So if this day pushes down 4,000 pips, then that puts us into the support area of 1880, and then that area will already be drawn on our chart, and then we can look for some long trades in the 1880 area of support should our day move down 4,000 pips from the daily start. So that's how you're going to use daily averages, monthly averages, weekly averages to plan trades with a degree of predictability, knowing your ranges, knowing your data ranges on your days, on your weeks, and on your months gives you an edge in trading so that you can be ready during your trading day to know, oh, this day has moved 3,500 pips. Let me go look at our data. Oh, we see in January 3,500 pips is getting to January's extreme for our daily range. 3,500 pips on the days is getting to our nearly 4,000 pip extreme for the daily range. I may want to start looking at price to reverse up or down, depending on if it's entering into a supply, demand, or a support resistance level. All right, traders, be profitable this week and review your data, review your support, resistance, supply, demand levels, and be ready to have a consistently profitable trading week. All right, see you in the next video. We'll have some updates during the video. We are planning to trade the Asian session tomorrow, so we may not have a video for you until after that session. So we will get out a video for you so that we're all consistently profitable traders. That's right. See you in the next video.